Hello, in this video I'm going to talk about Jackrabbit TV. The last half a dozen videos or so have been mainly focused on Relay, so I've gotten questions on whether or not TV has been abandoned or being shelved. And no, it's not, and it is working quite well. Jackrabbit TV is going to exist for a very long time coming. There's no chance of it going away without one severe battle. It has been a profit-making machine that has really done exceptionally well, especially with this insane market we have had since the middle of November. Right now I have the Bitcoin chart up going back to roughly this November 15th until now, where we've lost pretty much $30,000 in volume. That is a huge amount, but there's still plenty of opportunities to get into this market and trade it quite profitably with standard technical analysis. It does mean looking at the market at a more defensive state. See, any indicator is going to make money. Jackrabbit is just a money-making machine. They're not going to get rich, but with time and patience, short of a market apocalypse or some type of technical failure in the hardware, it is going to make its reasonable level of profit. I'm going to demonstrate this by simply making an indicator right now. Putting something up on this chart that's going to do well. First, let's start with the dollar cost averaging module. I'm going to move it to the main chart. And now let's get it set up. I've talked about this before countless times. Most indicators work well. You don't need special trading recipes, crystal balls, or anything else to do fairly reasonable in a standard market. You just need budget planning, risk mitigation, and risk assessment. Those three things really make up 90% of trading. The indicator really is extremely limited part of the entire process. Let's see. What should we pick? There's so many good opportunities here. But I want to prove a point. I want to go off the beaten path and just go absolutely crazy. Something that stands out as different. So let's do a stochastic. And now let's go find, what's another unusual? Let's do an RSI. They always seem to go well together and people like them. So, stochastic and RSI. Let's clean up all the nonsense. Go to historical markets. Turn on the chart. Okay, now let's clean up the RSI. historical market. Show the chart and get rid of the signal line. Okay, here we are. Default specifications. Nothing overly bright here. So let's link RSI to stochastic. I'm not even going to tune these yet. Let's just see what I come up with. Who knows? Maybe it'll be fun just the way it is. Okay, now let's link DCA to the RSI. Go to historic data. Now let's start toning it down. I'm on KuCoin, so I want a simple 1% take profit. I don't want a deviation, at least not yet. I want to see what the market will bring at a pure state. Now let's just do a 1% take profit. Now I always prefer to start out straight up 99 positions. That's what I'm looking at. So for a $10 position size, $1,000 covers everything I need. That's been my standard since I learned the hard way just how quickly I can get burned in the market. Okay, I need to clean up this part down here. So that's where I always start, no matter what. $1,000 per coin. Now I don't always stay there. In fact, most often I'll go down to simply $200 a coin, or even $100 a coin, depending upon what I'm actually trying to achieve. So there are many factors to take into account. But this isn't about those factors. This is just finding out of the box, making money. Let's open this up. So here we are. 1 hour time frame. Average profit 2%. Last profit 1.9. Now my base point profit is just 1%. So I'm making over my base point profit with no effort whatsoever. This particular combination, 3 purchases maximum. Now this ain't going to make me any money unless I'm putting out $100 or $200 position sizes. So let's go to the common 5-minute. Now we're starting to see extremes. $250 maximum exposure. 1.5% average. 6 trade cycles roughly in 1 month. So 1% of 10, you're looking at $1 per cycle profit, $6 a month on just this one coin. Not bad. In fact, this is quite reasonable. Now let's get to my neck of the woods, the crazy zone. Okay, and now we need to recenter the chart. 41 maximum positions per cycle. Average is 7. So worst case exposure on this coin was $410. 1.1% And here we go. Opportunity. So, $1,000, 20 trade cycles, roughly 20% profit in 4 days of your initial balance. Not bad. So if you take the average of 7 positions, that's $70, 20% of $70. That's $1.40. Simple, easy, simplistic, and it works. Cookie cutter, nothing special. I haven't even tuned the RSI or the stochastic to do anything fancy. Just literally right out of the box default settings. And there you are. Straightforward, easy, and simplistic. I'm going to go out on a limb with this one, and there's going to be a lot that would disagree with me on it. But in reality, when you think about the actual context of what I'm about to say, it's 100% correct. Anyone can make money in the market using just about any responsible trading strategy. Now, I'm going to emphasize responsible, meaning that somebody put real work into the mathematics, real work into the analysis, and did the appropriate context of analyzing the market. That's not to say that you're not going to lose money, because you are. In fact, that's the only guarantee in the market. But if you have just $1,000 and one coin, this will make money. And this isn't even the best choice of a coin to use. Bitcoin really and probably is your worst choice coin, simply because of its volatility. Let's simply run through a few coins and let's see the differences between Bitcoin and some of the others. I'm even going to take on some of the weaker coins. And by weaker, I mean lower market cap. Coins that you really shouldn't be trading unless you understand the market directly. But there are reasonable expectations that you can make with just about any reliable asset on the market. And if you trade anything with a 300 million market cap or above, you're likely to do very well with that coin and a proper recipe, and most importantly, understanding your budget and your risk assessment. This part here, the technical analysis part, in all honesty, it is the easiest part. Understanding how much risk you can take, that's a whole different ballgame. And that really is the most difficult aspect of trading. Let's see. No, we have a dead coin. Okay. Okay, Doge. Everybody seems to like this coin, and it does all sorts of weird things on the market. But it trades well. In fact, it trades very well. And this isn't even a really tuned recipe. Every number here is important. Study it, track it, run the numbers with your own finances. But if you have the $1,000, this coin's actually pretty good. Quite well worth the effort, in fact, if you have the risk assessment for it. Okay, now this is one I would be more likely to trade because it's USDT based, not Bitcoin based. Typically, I don't like to use Bitcoin as a quote currency, but that is just my personal preference for risk. Here, same coin using USDT as a reasonable approach. Now pay attention, 76 maximum purchases per cycle. That is extremely high. That's $760 that went into this one single trade cycle. Now that would be $7.6 per profit at the minimum. But its average profit is 2, so you're looking at about $15 for this one trade cycle. 100 positions is doable. It's not necessarily comfortable, but $15 off of one trade cycle, 12 trade cycles in a 16-day period. That's pretty good. That's reasonable profit for one coin. Now let's get down to some of the more let's see, where is it? Can never find coins when I want them. Of course, that's nothing new. Okay. Here we go. And I still can't find the coin I want, so the heck with it, we'll just type it in. KuCoin. One of my favorites. I like this coin. But this went all the way and broke the bank. And yet it still made its average profit. So in 16 days, this coin actually hit the stop. This coin took a loss. Let's see if we can figure out where this coin took a loss. So even with its loss, it still made the minimum 1% overall average profit. That is acceptable. Now, can I tune this to be more defensive? Yes, I can. I can tune this down to use only $100. But that is really the whole point of this situation. Tuning it, studying it, understanding what my risks are. Okay, I'm not seeing it, so it must be pulling in historical data beyond what the chart is allowing me to load. But still, the fact that it's there means it did its job. It figured out where to get out. That is important. And you can see here when the market just gets to total nonsense, it takes on a lot of accumulation and still sells at a profit. And it might have actually made a profit. Here's another accumulation cycle. And yet another profit. So, it did well. It made the minimum profit I wanted. It took on a huge amount of accumulation, but if you plan for it and you know what you're doing with your own abilities, tools like this will make money, even when the market is just a total bloodbath. Opportunities don't stop just because the market turns bearish. It just means you have to be a little more careful about how you take your opportunities. Or in this case, simply looking at better opportunities. For example, let's make a slight change. I'm going to go to price defensive. And as you can see, it's changed everything. So going to just a slight change, I've increased my average profit even though I've decreased my number of trades. Let's go back to the 1 minute. And let's find the chart. There we go. So it's easy to go through and tune and check and pick the places you want. Even if 5 minutes is too aggressive, you can always go to the popular 15 minute. Here's a good example of the 15-minute chart. It avoided this whole drop right here. Got in here, sold off, got back in. Got in and sold off. Again, no tuning has been done. None. And yet it is quite nice. 15-minute chart for this particular recipe really looks nice. So, research. Do your research. And the most important part of your research is understanding how much risk you can take. So let's get to a big question. A question that I've seen quite a bit and really is a good question. How do you know how much risk you can take? That's actually a very good question. I have found from my own personal trading, whatever coin I think I can take on for risk or that I have an appetite for, cut it in half. I found that to be the best approach. And it has worked reasonably well. So whatever you think you can handle, cut it in half. and it will give you a fairly consistent avenue. Let's pick a coin that I'm trading right now. This coin is not the greatest coin. Let me just say it. It has weak statistics, very weak fundamentals. It's simply not the greatest. And yet, it does well simply because of a stable recipe. Now you'll see that I use the 1 minute chart a lot. That's just my personal risk. If you feel more comfortable on the 5 minute chart or the 15-minute chart or the 30-minute chart, fine. Use the chart you feel comfortable with. Now this is quite nice. The 15-minute chart here does quite well. 15 and 30 are the two common charts that I see a lot. People like these charts because they do well. And there's nothing wrong with this profit. 4% for an untuned strategy is phenomenal. Especially on a coin that's very poor quality to begin with. And this is going through all the way from the November 15th drop. Let's see. Okay, here we go. So, you can see just how far it dropped. Would have been nice to catch this. Actually, it caught it here, so I'm getting happy there. I got out, although that still would have been nice. But oh well, never chase profits. Got in, got out, got in, got out. I like that. That actually looks nice. Got in, got out. Started trending downwards. Really trending downwards. Serious downward spike to the point, and boom, got in, got out, bottom dropped out, got in, got out, got back in. Simplicity, really, is the best approach. Yes, it's nice to load up on 10 different indicators to perform all sorts of fancy math. But the more moving parts you have, the quicker things break. I think I've pretty much covered every aspect there is. Jackrabbit isn't going anywhere at all without one hell of a battle. I'm in this for the long haul. There's too much money to be made. The markets aren't going anywhere. They pretty much look like they did last year. Just a little more messier here and there, but nothing that stands out. Tools for trading are improving. Jackrabbit Relay, Jackrabbit TV, they are tools. They help you make informed decisions. They can't work miracles. They can't help you plan your own personal financial situation. There are things you can do, though, to help you, like I just demonstrated. Take whatever coin you want, whatever position size you want. Figure 100 positions. Start there for your analysis, and that will give you a fairly resilient and safe trading prospect. There's nothing special about any of these tools. They are just tools, no different than a carpenter's hammer or saw. How you use the tools can do anything from building a table to building a house. Trade safe. Trade responsibly. Know your own risks, and you will make money with reasonable assurance. It really is that easy. Until next time.